Hey, good morning, everybody. Welcome to another day of the Mark Board brought to you by Mike Bjork. Today is Monday, March 24th. Hope you guys had a wonderful weekend here. March Madness has been kind of crazy lately, so congratulations to a lot of those smaller teams that created the upsets. Always kind of fun to root for the underdog. We got one economic news release scheduled for today. We got the market flash PMI for the month of actually this is for the month of February. My apologies. So we had a 57.1 for the month of January. Now, anything above 50 is considered expansion. Anything below that is regards to contraction. So we had a little bit of expansion, and so it jumped up to 55 and a half. So it pulled back. This is related to manufacturing and industrial. So we have to kind of watch where this gauge is. So we did pull back a little bit, but it is in the black territory, meaning that we have expansion still shown. So a little disappointing right there, obviously, especially with the warmer weather coming up. So let's take a look here at the headline news, and that kind of created the stock market, dragged the stock market down a bit. It's across all levels. All three of them are down. And colors, we got some earnings reports coming out. So it's not just the PMI coming out; it's some of the earnings reports coming out as well. We also had a comment. It's not driving the stock market right now, but comments by San Francisco Fed Governor Williams. He made some comments, and he's kind of important in the sense that he's not a voting member of the Fed, but he has worked with Janet Yellen, the new Fed chairwoman, as she was the former Fed governor for San Francisco. Basically, he doesn't think that the Fed comments last week were related to how they're going to tighten up policy. The comments that they made, he doesn't feel are doesn't mean that they're going to necessarily tighten up policy sooner versus later than what they previously said. So he thinks the markets kind of overreacted to the comments that were made. So that was his feeling towards it. So whether how the market is going to react to that later on, it's hard to say. So we'll jump over to the bond market and see what's going on over here. We did start off about 17 basis points lower, so we're up 27 for the day, which brings us to 10 from where we left off on Friday. So almost on the verge of a price improvement here on the West Coast. Now, earlier in the day, for East Coast people who get their rates sooner, basically would have had pricing for the worst, and now when they started the morning off and as the market rebounded, they themselves would have pricing for the better. But here on California here, interest rates here, there's really no change in pricing as of yet. All right, so it could change later on if we continue this upward trend. As we see, we had 3 days where we've been kind of improving, but the concern about it is that each day we started lower than where we left off. So we do got to kind of watch that. This could easily trend either way right now. It doesn't give us a clear signal that this is going to trend upwards. All right, folks, thanks for watching. I hope you guys have a wonderful day. We do have more economic news scheduled throughout this week, so be prepared. And again, thanks for watching. I hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow.